are towards the end of September 2024, which sounds a little bit crazy to say. And we have come off our third Bank of Canada rate cut in a row. That was early September. The Bank of Canada overnight rate now is at 4.25%, which means most banks' prime rates are at 6.45%, which is what your variable rate mortgage will work off of. There's a lot going on in the world right now. The US election is coming up. The British Columbia provincial election is coming up.
We should also acknowledge the Fed in the US just cut their rates by half a point as well.
50 basis points, so you're right.
It's a little more ahead of what a lot of people were thinking.
Yeah.
Yeah.
And so this will be a little update on what is happening in Greater Vancouver real estate as of towards the end of September 2024 and how our fall market has started out. And I would love for this podcast to be optimism and stories of chaos. Lots of new listings, lots of new buyer activity, homes selling quickly, people upsizing, but that's not really the case at the moment.
It's month by month. Every week has a different feeling.
Totally.
Every month has a different feeling.
We kind of, and from our last market update, we kind of anticipated activity to pick up quite a bit in the fall. The summer was very slow, especially August was very slow for new listings and for buyer activity. A lot of even good homes that listed, good condos that listed were just very, very quiet for buyer activity in the summer. And it's almost carried over. There's definitely been a lot more listings in the last few weeks, which is pretty typical after Labor Day long weekend. But the buyer activity, even though it's picked up a little bit, definitely is not at the same pace as listing supply. And so what we're seeing from a lot of properties in Greater Vancouver, and when you're buying or selling, you need to be really specific about what type of product you are buying and selling. But as a whole in Greater Vancouver, a lot of listings that are listing in the range of where they should be are pretty quiet and sitting on market 30, 60 days.
The good listings are struggling to sell. Even the turnkey properties that used to be a hot commodity. And on the buyer thought, yeah, there are more buyers out there. It's just whether they're actually pulling the trigger. You know, oftentimes for single family homes or higher price points, people that want to buy have to sell too, and they're looking at the market conditions, and it's a bit slow. Mm-hmm. Yeah, but for us in our little bubble of our real estate business in Greater Vancouver, this year's been a bit of a roller coaster, and I would say lately it feels a little bit slower than some of the months we had previously this year. You know, that we had some great sales early in the year in March. In March, there was a little window where there was a low inventory, and the listings that we had got a little more attention than what I would see today. We had a little spurt of some stronger sales between May and July, but come around late July, August, things for us started to quiet. And in September, you talk to 10 different realtors, they give you 10 different stories. Some feel it's getting busier. Some feel it's still slow in the struggle. And for us, I think we're working harder for less sales, but that's just because listings are building up, days on market are building up. And we're just running into more collapse deals.
For us specifically, I think our team right now is at the most number of listings that we've held at one time, probably since 2019.
It's been a while, yeah. Yeah, they used to just sell through before, and now we're building up. Yeah. Yeah, I'd say 2019.
Probably, right? Yeah. You have some stats. Should we start with some stats? And then we definitely want to share with everyone the typical kind of conversations that we're having with buyers and sellers, because they're very different in markets like this. And then kind of how negotiations are going to. I just want to provide some examples because I think it's really interesting in these, I'll call this a fringe market, where we're coming off, an interesting start to the year where we had some busier months, and then the summer was very slow. And now we're like, the momentum seems to be picking up slightly, but at a slower pace than we kind of anticipated. And more rate cuts are around the corner from the Bank of Canada. I think a lot of buyers are sitting on the fence or being very selective of a move, or maybe are just waiting until that move seems more affordable from a monthly cost perspective with interest rates until next year. But we're in this weird fringe market where, like we've kind of talked about, some really good listings priced correctly still are not selling. So maybe we'll share some
selling?
stats.
Yeah. Let's go into it. I mean, I like to look at a few different things. We get the real estate board market stats that kind of give a general overview every month. headline lately has been listing inventory's up, sales are down. So our sales are below the 10-year average. And then this is a bit dated, but August sales, I think we're about 26% below the 10-year average, if I remember it correctly. Don't hold me to it. But all in all, the sales are down and listing inventory is up. But does it mean sometimes these stats are skewed? Listings, there's a lot of ambitious listings out there that are priced not to sell nor are they the product. I mean, land assemblies are an absolute dog right now. So, just as an example, I was looking at East Van listings over 3 million. And in the last 60 days, there's been 2 sales. And there are currently 130 listings, 3 million or above. So when you have 2 out of 160 days, out of 130 listings over 3 million selling, it just kind of gives you a thought that there's a lot of, probably land assemblies, but also higher end listings that are just overpriced.
That's a 1% sales ratio.
Well, yeah, that's kind of like finding what is an absolute dog right now. And that right now, if you have a $3.5 million place in East Van, it's a struggle. And I think I isolate East Van, but that goes for most markets. Higher end properties are struggling. And land assemblies, I mean, there's a bunch in New West. They're just not moving, so.
I'll let you continue, but an interesting question, because I had a conversation with someone who has a high-end property in North Burnaby a couple days ago. What do you think their perception of the market is? Because it seems like there are some really unrealistic expectations at the moment.
And I guess if it's a high-end property, it depends what it is. If it's a high-end 6,000 square foot, 20-year dated property, buyers are selective. They might look at that as, everything needs to be updated. And even though this is a good location and a good value, replacement value, I don't want to do the updates. So let's not buy it. Yeah. I think the ones that are doing best are, there was a listing around in Brentwood, those one of the single family homes behind amazing Brentwood, that got a lot of attention. There is, North Burnaby as a whole is performing better than most markets, I would say. Yeah. It's one of the stronger markets out there. And I think the draw is, it's one of the areas that's, one, closer to Vancouver. So from a location standpoint, it's physically in a great convenient spot. But 2, I think there are some actual builders that are buying land there to develop into 4 to 6 units, this is a small percentage of the sales that are going through, but it's more, Burnaby has updated their zoning, and there are examples of sales in Burnaby South by Canada Way and Burnaby North that are likely going to get developed into multi-units. Yeah.
On that topic, have you ever seen a larger disconnect? And because I think my answer is no, I haven't in my career. And this is a bit of an unprecedented situation that we're kind of going through in Greater Vancouver real estate, especially in our careers, where interest rates go up 5% within a very short period of time and then now are on the way down. So we're kind of educated guessing on where we see market conditions going in the next 12 to 24 months. But have you ever seen a bigger disconnect between sellers' expectations of the future market and buyers' expectations of the future market? Because there's so many buyers that I talk to on a daily basis that honestly think that we have not seen the worst times of Greater Vancouver real estate yet. These interest rate hikes are affecting a lot more people than anyone really knows or the media is talking about. And we're going to see prices come down. And then on the seller side, they start seeing rate cuts happening. And I've had a few people ask if they should increase their price recently. And it is a bizarre comment to me. I don't understand, if you really want to sell, we've been on market 90 days or, whatever the situation is, we haven't had an offer or it's been extremely slow. Yeah, there's a little bit of optimism with rate cuts, but I feel like this is going to take a bit of time to play out where we actually see activity come back, first of all, but then market values even start to kind of settle out and climb again.
Sellers want the good news to appear right away. Yeah. And not all sellers. This is just the seller that wants yesterday's prices, the listings that are not selling, that are sitting on market. But yeah, you're absolutely right. There is a disconnect. Often there's, it's lagging. I think it's going to take till next spring to start showing the activity increase from the recent rate cuts. And even if the next rate cut on October 23rd, even if that was like a 50-point cut, I bet November is still going to be relatively slow. It might have a little bit of spurt of energy, but the fixed rates are still high. Most people that want to buy have something to sell. A lot of the conversations I'm having, from buyer feedback is, I like this place, best one we've seen so far, but have something to sell, not ready to offer. Yeah, and that sense of urgency is basically gone. And I think that urgency will come. I think more people will get off the fence in the new year. And my guess we'll start seeing its colors around February, March. And it's just because more people will be willing to sell to buy at that time. And also we have 3 more rate announcements between now and February. So I am very optimistic about next spring. I do still think there is going to be excess supply. But I do feel that a good turnkey townhouse, single family home, the affordable condos for first-time buyers, I think those are going to be much stronger than where they're at today. And they're not all doing that bad. Like one of the areas that I was looking at was New Westminster condos. And, I kind of just, in perusing the sales, it's pretty apparent. It looks like $500,000 to $750,000 is a pretty common price point. The median New West condo that sold in the last 60 days was around $600K. So $600,000, that can get you a very high-end 1-bedroom, or more often in New West, a 2-bedroom. 6 out of 38 list sales in the last 30 days sold above asking. So There are some multiple offer scenarios going on. That's, what is that? Just under 20%, 18%, something like that. It's also an 18% sales ratio. So I guess that means, when you have in the strongest markets that we experienced a few years ago, you'd get like a 50% sales ratio. What that means is like if there's 10 listings, 5 are selling in a given month. But right now, if there's 10 listings, 1.8 are selling in a given month. So it's at that kind of turnover rate, prices aren't going up. They're not going down. They're just kind of staying. It's balanced.
Mm-hmm. Can we just clarify for listings selling over list price? This does not mean that we are in crazy multiple offer scenarios where market values are climbing each week. These, especially in markets like this, these are specific scenarios where sellers are listing on purpose below market value, and sometimes in some cases like 10% below market value, to ensure that they get interest and an offer quickly because they've purchased already. Like I had a buyer offer on something recently that listed at $799 when multiple recent sales are in like the high 8s to 900 range. So that's what's that, 10% off basically. Yeah. So this is not where you're listing at market value, getting 12 offers and selling 100K above. These are specific scenarios where sellers may have put themselves in precarious positions and need to sell quickly, essentially.
There are still scenarios today where underpricing a listing for multiple offers can be successful. It's just
North Van houses.
Yes. Yeah. Where? Denny? Specifically Lower Blue Ridge. Denny had a client offer on a place in North Vancouver that got how many offers?
10 offers. Sold $436,000 above list price.
$436 above. Now, it was underpriced to begin with.
Yeah.
Arguably underpriced by, I think their price was a great price for this market, but it was clearly intentionally underpriced. Yeah. And a single family home with a nice backyard, good living space in North Van gets, especially under $2 million, catches a lot of eyes. Yeah. I also had a client offer and a half duplex in North Van that got 9 offers. And so North Van is one of the stronger markets out there, especially for family. Those are 2 family style homes. Yeah. So that there is demand for family homes. Yeah. I don't know. I think there was a time where you could price anything at $1 and the market would save it and take it to the market price, and you didn't have to worry about list price as much. There was moments where it was intentional to price things at $999 or $1.199 or $1.499, even if it was listed, the value was $1.7, and the intent was to get subject-free offers, multiple offers, and closing dates that match up with the seller's purchase. That was kind of a genuine strategy. But nowadays, that's a very risky strategy. And rarely are we suggesting to sellers to underprice their properties for multiple offers. And even when we do price a property, competitively and do a IDRPO, like a scheduled offer presentation date, like a week after market, I'd say that these odds of success are around 50% nowadays. Even if you have a good one, and unless you intentionally underprice it, it's really hard to be confident that it's going to deliver. And the reason is a lot of buyers don't want to get a mix of multiple offers right now. And a lot of those buyers have something to sell. And so that all in all, that really comes down to lack of urgency and people feeling they have time. And, quite frankly, I think we all forget. And yes, the rates are high, payments are high, but the buying conditions of the market of the past were horrific. When markets are good, buying is terrible. And what I mean by that is There was years where people were continuously putting subject-free offers or doing pre-inspections, getting themselves in multiple offer situations, and absolutely frustrated with the market. And now you have time to do an inspection, even put in a subject-to-sale offer, but less people are doing it. And the ones that are, I think they're going against the grain, and the mob of buyers and people will think alike. And I think a lot more people will show up next February, March. But I would suggest some people, if your place is ready and turnkey, really consider doing that move in October, November this year. If it's a lifestyle move, and that you're going to have much better buying conditions. Anyway, New West condos. So $600,000 was the median price point. What that tells me is affordability is still in demand. The sales are still pretty strong around that level. Likely first-time home buyers. I looked at Brentwood as well. And actually, on the New West note, the high sale in the last 60 days got multiple offers, Denny. And this is kind of a rare thing where you'd get the highest sale for a condo was 1.275, and that was actually like a penthouse on the Key, and it got bid up in multiple offers, which is rare. So it was priced in the one. It got bid up $100,000 or so. Brentwood. Median sale price over the last 30 days, $731,000. The high was 1.125. 15% sales ratio, so 60 sales out of about 400, call it. And so a lot of properties sitting on market. And in Brentwood, the story of what's sitting on market is just mostly higher end, high price per foot condos. The median price per foot that sold was around $1,129 a foot. And when you look at the listings, I'd say more than half of them are priced over $1,200 a foot. And there's a lot of high-end listings in Brentwood that are getting to $1,400, $1,500, and even in some cases $1,800 a foot. So there are some people that are ambitious. Brentwood is a product, is a very convenient location. I think it's going to continue to be more desirable. I like what the amazing Brentwood, that mall is turning out to be. It's quick access from the highway right next to Vancouver, but it has these mammoth concrete towers that sell at a real high price per foot. And there seems to be a little bit of imbalance between the supply of what they're building or what's available, what's coming down the pipe, and the demand for them. They really need that low interest rate investor, market speculator to start buying these pre-sales for these projects to complete. Because if all these towers that were underway were complete right now, there would not be nearly that many buyers eating up the supply. They'd be just sitting there vacant.
It's similar in New West and maybe throughout the suburbs, that like more high end condo market for each individual city is quite slow. Like New West, for example, we have a couple listings downtown New West that are not nearly the price points that Brentwood demands, but higher end for New West, and anything built pre or newer than 2000. Currently available in downtown or the Key. There's 60 listings, and there was 3 sales last month. So it's pretty slow for like the higher end. It sounds like the majority, and especially with a median sale price of $600K, that the majority of those like condo sales in the last couple months are first-time buyer, entry-level type condos in New West.
The 2 new towers that closed on Carnarvon Street, Ovation being one of them, can't remember the other one off the tip of my tongue.
618 Carnarvon.
Yeah, 618. They actually had surprisingly decent amount of sales compared to what other new condos are. And those when a new tower completes, there's usually a rush of listings. And, I was surprised. I think there was about a dozen sales in those buildings, which compared to other buildings, interurban, they're struggling a little bit more. But yeah, you're not right. I mean, you're not wrong. I looked at New West condo sales, newer condo, and don't forget we have the Boza Pier West buildings completing soon. So there is going to be a rush of listings happening there. I don't think there's enough buyers to eat up those supply. I think that's going to still be a product that will have favorable buying conditions next spring and summer, with the exception of certain entry price points, like an entry-level 2-bedroom, entry-level 1-bedroom with a good layout, a good building. They seem to get picked up pretty quick by first-time buyers. And I think every rate cut that happens increases the affordability, and that will continue to happen. It's the ones that are a little bit higher end, not call it the $700,000 2-bedroom in the new building. It's going to be the $900,000 2-bedroom. Those are the ones that are struggling.
Yeah.
Yeah.
What do you think Pier West is going to look like in 6 to 12 months from now? Because my guess is there's a lot of listings that come out, but the prices that those people paid for those condos probably doesn't exist right now. So are any of them going to sell through unless they're like severely discounted?
I don't I would be shocked if anyone recoups their investment right now. I mean, that's pretty negative news. But they sold at a premium at the peak. Beautiful waterfront condos. So I do feel that they will sell at record prices. But my guess is they're probably about 20% off of what people paid. And, if the building closed right now and there was 20, 30 listings in them, 20% off would still struggle to sell. There'd be a few sales for the more favorable units. The lower price points are the ones fronting right on the water. But that's a very high-end development. And I think it needs the rates to come down. It needs the market to improve. Yeah. But it will be a net benefit for the downtown core of New West. Like it will, I think, really bring a lot of life down there.
Yeah.
And 5 years out, I'm a lot more optimistic than I am, this year or next. I should mention, I do want to say Brentwood had a high sale. I think it was in August. That was over $2 million for a penthouse, 1,700 square feet. So they do have some life for luxury, but there's a lot more luxury products there than buyers. Port Moody condos were one of the stronger markets I looked at. Port Moody still seems to outperform the whole market. I think they had a 30% sales ratio, which is better than most. And median sale price was $780, which is for a condo. 12 days on market average, 6 days on market median. So they're selling quicker. There's more of them are selling through. Now, Port Moody is a smaller market. There is significantly less inventory than other markets like Burnaby, but it is a desirable place, and it seems to continue to be. Mm-hmm. I also looked at townhouses because townhouses, lack of family housing in this market. I say lack, but it seems to be less lacking now. But everything's built up. But townhouse sales across Coquitlam and Port Moody, 25% sales ratio, which means 1 out of 4 listings are selling. The median sale price in the last 30 days was $1,182,000. So call it 1.1. 1.1 gets you, call it a 1,500 square foot, 15-year-old townhouse. And then 9 out of 70 went over asking. So not a high percentage, low percentage, but I would say a 25% sales ratio for townhouses in Port Moody and Coquitlam is still technically a seller's market by the Real Estate Board of Greater Vancouver, but that's as much of a buyer's market as I've seen for townhouses in those areas. And I think that they were selling like hotcakes not long ago. So I think now's a great time to consider looking for a townhouse in those areas. Houses, Denny. We talked about Blue Ridge or North Van having a multiple offer. Have you seen any house sales that have surprised you outside of that in the last, call it, month or two? Or has it just been more?
Nothing's coming to mind.
No, regular news.
Well, you know what? Our 321 Queens, but that was a few months ago.
Yeah, that was July. Yeah. And like I said, I think we had a few months in the past that were stronger than how it feels today.
Yeah.
North Vancouver median sale price last 30 days, $2.293 million. Sales ratio is 14.2. So there is a lot of inventory as a whole. Even though North Vancouver is one of the stronger markets, there's a lot of overpriced houses on that market that are not priced where they should be. Yeah. North Burnaby had 11 out of 34 sales in the last 30 days get over asking. And that's why I say it's like, so it's almost like that's a third. Yeah. So that's one of the strongest stats I've seen out there for what's happening right now. The median sale price was 2.274. And I think that's, whether it's a 1950s, 60s bungalow or a newer built home, there's demand from multiple buyer segments in North Burnaby. You get people that want to be close to Vancouver. You get builders looking at it that are willing to buy in this market because they see the opportunity, and you get people that there's a little more wealth that don't want to build, that have options to buy newer. I think North Burnaby is probably one of the markets that may go through the biggest change over the next 50 years, in my opinion. Like when I look at the what's going to happen along Hastings Street, what's happening in Brentwood. And also if the small scale multi-unit developments start really taking off, there could be a lot of cool small developments all trickled out throughout North Burnaby. So I'm a little more optimistic, and I say that because the lots are bigger, more builders. I think over time more builders will be drawn to that area than say East Vancouver, where you get a 33 lot, and North Burnaby you might be able to find an 8,000 square foot lot. And then outside of North Burnaby, I looked at East Vancouver. Median price over the last 30 days was $1.992 million. And as I mentioned, over $3 million. Lots of listings, very few sales. So, but East Van is one of the stronger markets out there. And if you have, a turnkey house in, say, Cedar Cottage or on a good street, or I imagine they fly. So I don't think East Van seems to be, in the past, one of the more resilient markets in down markets. Except for COVID.
That's right, eh? Yeah.
So where are we at now? We have 3 rate cuts under our belt. Next rate announcements, October 23rd, one again in December. I think even if those were kind of favorable rate cuts, we're in a fall market. And last 2 falls have been pretty slow. The only difference, I think, with this fall is we have expectations of rate cuts and a few under our belt. I'm curious to see if more people show up in November, or if November ends up being a flop. And I say that because in November, what I could see happening between now is listings start dwindling off. The people that tried to sell at a higher price that didn't see success will come off market. Maybe the sales will maintain, and I'd be curious to see if some people start stepping up and offering in November. And I think that the play there is offering subject to sale. Not every listing is expecting offers out of the gates. There's a lot of listings that are sitting there. And this is the kind of market where I think a subject to sale offer is a great opportunity, because right now we're doing this podcast late September. By the time you listen to it, it might be October. Yeah. But in October offers, you're looking at, do we want a December close or a January close? And it's more common we're getting those January closings. And that gives, I guess more sellers will expect longer closes, and with longer closes, it gives more buyers time to sell.
Do you think having a subject to sale in your offer right now for a buyer affects you as much as it would in a slightly busier market in terms of price point? Because usually having a subject to sale in your offer, to get it accepted in a busier market, it costs you money. It might cost you $20,000 or $30,000 or $40,000 in order to get it accepted. Do you think because of the listing inventory, because there's more sellers sitting there for 60, 90 days, that maybe that discrepancy has gone away?
I think, a motivated seller that sees a quick closing without subject to sale, I think is more willing to discount their price than when they see a subject to sale offer with certainty. So if I were to kind of just throw up random arbitrary numbers, let's say a $1.5 million listing, if you're offering subject to sale, the expectation is you're not going to be able to get them down much on their price. Maybe if that listing's been on the market for 30 days, maybe you get them down to 145. $50,000 off, and you have very favorable subject to sale terms where you give yourself a month and a half to sell and you close in late January. That to me would be great for a buyer, because yes, you might feel like you're overpaying, call it $50,000 in this market, but you're not overpaying unless you sell your place and you have certainty of the sale price of your place. You have the option, if you don't get a favorable sale in your place, to try to renegotiate your purchase, but you can't count on that. All in all, you pay a little bit of a premium on the place you're buying for certainty of a sale, and a little more time on your side, to do the inspection. And you might even be able to get away with a renegotiation. If you came to that same listing subject free or very clean subjects, I think for a motivated seller, they might discount it even further. Let's call it 1.4, so an extra $50,000 off. But for that extra $50,000 off, you're either going to take financial risk, for some people that might be bridge financing, it might be pressure to sell your place, or you're just sitting on money right now and you're in a good spot. If you're sitting on money right now and you're in a good spot, I think there's a lot of motivated sellers out there that would love to hear from you.
Speaking of sellers, what are those conversations like right now? For me, it's a lot of expectation management, and it's really, really difficult in a lot of product types in Greater Vancouver right now to recommend a number that is going to sell quickly. That might be a much lower number than we're even comfortable suggesting in a lot of scenarios. And so whenever we're evaluating properties, and we've done podcasts on this before, but we're looking at recent sales, there's pros and cons with each property type. And then we're suggesting, okay, maybe it's $899, maybe it's $999, whatever that is. But that's not a quick sale price. That's a sale that may or may not sell this fall, but that may be in line with recent sales. And then there's the question often from sellers is, well, what's the number that sells in a week or two? And those are really difficult conversations to have, and very product specific and inventory specific of what's available in that product type. But those are the tricky ones where discounting 50 grand, it still may or may not sell in a week or two because there's a lot available at the moment.
I think a property that has a negative, call it a busy street, fixer-upper, something that caters towards buyers that have to put investment into the property or really weeds out the majority of the buyers because of the work that's needed or the location. I think those ones are hit the hardest, and those are the best to sell in a busy market and the worst to sell in a slow market. Like an easy example of a conversation would be if a seller has a realistic value of a home today at 1.5, it's kind of acknowledging, yes, in the best month of 2022, this was probably a 1.7 home. But right now, and in 2021, it was probably a 1.5 home, and we're back to those prices. And 1.5 today is realistic based on the sales, but the sales ratio, it just may take longer to sell at 1.5. I think and this is just the vibe of my moment right now, late September as we're talking, but I think when I look at the listings we have, a lot of them would have been more successful earlier this year than right now. And there's more optimism now with more rate cuts and more optimism about next spring right now. But it's just, I think the story I run into most is the people that like what we're selling have something to sell, and they just don't pull the trigger for that reason.
Yeah.
But with sellers, there's just no certainty. I think, if it's a desirable product that's getting a lot of showings, it's price. If you don't have the offer, it's just price. Because if it's getting a lot of showings, that's a sign that there's buyers that want it, and you're just a little bit above the price. But if it's you think it's a desirable property, but it's not getting any showings, that's where you might have to be, discounting to get it done. And I think a lot of people aren't prepared to take that hit right now.
A lot of people are not. That's the reason I say this disconnect between buyers and sellers right now. A lot of sellers assume that market conditions will improve every month moving forward, and buyers are not willing to pay the potential of 6 months to 12 months from now kind of thing.
If you're only selling and not buying, and you're not in an urgent rush, sure, then hold off. It's not the time if you don't have to sell. But if you're selling then buying, I think a safe assumption is that the equation will not change. It may change for the better or worse a little bit, but you can't assume it's going to change. If you wait for your value to go up next year, what you're going to buy is going to go up typically as well. Mm-hmm. I mean, there's certain equations that I think will be more favorable. If you're leaving the city, for example, I think selling now or selling next spring, and if you're going to, say, the Sunshine Coast or Upper Island or Okanagan, I think those markets are going to be slower for longer. So I do feel that there's a scenario, whether it's today a sale or wait till next spring. If the idea is to leave the city to a smaller market, I think those smaller markets are struggling much more.
Yeah.
The areas that went up the most post-COVID seem to be the areas that struggle the most right now.
Yep. Yeah. Main Island.
Well, Denny, let's timestamp this once again. Today is what? September 26th. We don't have the market stats for this month. My prediction between now, I guess my question for you is, what is your prediction between now and February? Do you think prices are what do you think is going to happen in terms of buyer sentiment, seller sentiment over the next few months?
You mentioned November and possibility of inventory going down and buyer activity improving. My guess for this fall, the rest of 2024, is this old Western standoff, Jamie, where buyers don't want to pay the prices that are listed, sellers don't want to discount prices, and our sales numbers are not improving over the next couple months. I think it'll take a couple more rate cuts, which potentially is October and December. And then we don't start seeing activity really improve on listings until probably late January.
Yeah, I could see that being the case. Yeah, I kind of agree. I think that we're going to see a spurt of interest in January and the new year hits. And I think November is going to be similar. I think the one thing that comes true in the past, and this might be the only differences here, is in the past when markets get soft or slow, listings come off and the supply dwindles, and that kind of holds the prices up.
Yeah.
That might be the only difference this time. If listings don't dwindle and come off the market in October, November, and they just sit, that could keep things slower for longer. But if it goes off past trends, I think we're going to see a lot of people give up by November, December, and a lot of those people that give up won't come back to market until, say, April or May, and there, might be a window of opportunity, January, February, that could have favorable buying conditions in the short term.
I'm pretty confident in saying that the buying conditions, you're saying selling, yeah. I'm pretty confident that the buying conditions today are going to be significantly better than 12 months from now, and probably quite a bit better than 6 months from now.
Yeah. Oh, yeah.
This is a really, really good opportunity, I think, to if you're looking to purchase your first property or upsize, I think really good opportunity.
For turnkey, entry, first-time buyer products, family products, land, distressed, fixer-uppers. I think those might be a while before they come back.
Yeah.
Yeah.
But it's also worth saying, on the buy side, try not to get attached to something, because there are a lot of stubborn sellers out there that just will not move to where our opinion of market value is, and will write an offer that's $100K below their list price because that's where recent sales have happened or whatever that may be. And they're just not willing to work with you. So you need to, if you are buying in markets like this, you also need to be prepared for the reality of some of these stubborn sellers.